Going a little bit further into this line of thought, what happens if, let's say, Carolyn, evaluate this business, but running this business or the money's managed by another corporation attached to it, which I control? Whether it's if I own an apartment building and I'm functioning that, usually it's a separate corporation, but it falls under the shell of another corporation. How do you bring that into the mix? Does that affect the valuation at all for that particular business itself? Does that factor into it?
So if I understand you correctly, visually, so we would have OpCo, and above OpCo, we would have HoldCo,
Yes.
right? And sometimes beside OpCo, you might have real estate co that has the mortgage on the land that or building that OpCo is operating out of. And yes. HoldCo owns shares in OpCo and HoldCo owns shares in real estate co.
Yeah.
Okay. So in that case, we look at value. So if it's the value of HoldCo that we're after, the one on top that owns the two, then we use what's called an asset approach. We're going to value the assets owned by HoldCo. Because HoldCo and real estate co are not operating companies. They don't have an operating business, but they own shares in an operating business and in the real estate company. So then we separately value the OpCo, the operating company. And that operating company, we would use our traditional operating metrics, operating methodologies, where you're looking for the present value of future cash flow, and you're looking for a value from a market perspective. So, and then when we get to real estate co's got sort of it's not really an operating company, right? It doesn't generally have revenue in excess of the rental rates that are coming from OpCo. So we value that one on an asset basis as well. So once we figure out what the value of OpCo is and real estate co, then we put them back into HoldCo and value HoldCo that way.